in on those pre-open rates 9 a.m. and find out what it's looking like. And for now, it is a bit tentative for the frontline index around the 17,880 mark thereabouts, and for the Sensex very mildly in the green. Let's get in a take then, Nuresh, from you as to what your top mid-cap call is.
So continue to stick with the buy on NCC Limited with a stop loss at 88 and a target price of 110. The stock is on verge of a big cup and handle, inverted head and shoulders breakout. The stock has attempted that 94 to 96 mark almost 6 times over the last 2 years. So it looks like a big breakout, and the results also have come out to be good yesterday. Expecting this to make that breakout move towards 110 over the next few sessions.
All right, Kunal, your mid-cap call?
Well, it's a buy on Havells. Interesting pattern being formed yesterday for the stock. It's a diamond pattern on the daily charts for Havells. The stock given a breakout about that 1200 mark after almost 1 month of consolidation within this pattern. So would suggest a buy. Targets to be kept on Havells for 1300, stop loss at 1200.
Let's put Kunal's idea on the screen as well, just to establish that what is the idea which Kunal is working with in terms of a day trade or in terms of a positional trade. He likes Havells. That's 1240. Chakri, give me a money making idea, not for today, not for tomorrow, maybe for this year.
I think still it's PSU banks, Bank of India, Canara Bank. After it was a crowded trade, everybody sold down. Now is a good time to buy. And I think, with the trading at half-time book, in a year from now, I think the stocks will be a good 40-50% higher.
Chakri, if you have to, let's say, buy only 3 stocks for next 3 years, only 3 stocks, and doesn't matter what is happening in the world, doesn't matter what Fed is doing, you will only be focusing on those 3 stocks and your filter coffee in the morning. So what are those 3 stocks?
Okay. Reliance Industries, because, it's now into multiple businesses. State Bank of India, which funds all kinds of businesses. And L&T, because, again, India's capex story is dependent on capex.
Then one should buy Nifty only, no? If you're buying Reliance, SBI and L&T, then might as well buy Nifty.
Yes, I mean, true. But there's a lot of growth, and if you look at individual stock positionings, obviously there is money to be made in the smaller mid cap.
Naresh, anything else?
But this is a balance of safety and risk and return.
Naresh, anything else you've identified which is slightly more like a 3 to 6 month kind of a positional stock? Because the way you analyze charts is that you also look at positional calls based on historical performance and also periods of underperformance when the base building is done.
So in terms of leadership, one sector which is clearly coming up is infrastructure names. So it's not just NCC, which I like, which is giving a breakout. We are looking at NCC is trying to make a 2-year breakout. HG Infra, after making a peak almost in 2021, has gone sideways and is now on verge of a breakout. PNC Infra is on verge of a breakout. One of the best names in construction, which is KNR Construction, which did really well in the previous cycle, is also on verge of a 1-year breakout. So this is a sector which has popped up in a structural trend change, wherein this could continue for the next 6 months and actually have a strong absolute returns irrespective of the market condition. So this is a sector which has popped up on our radar in terms of a short to medium term view, which is the whole sector as such.
Kunal, for the viewers who are just tuning in right now, let's just focus on those new age fintech companies, Zomato, PB Fintech, Paytm, even Nykaa for that matter, and the stark recovery that they've seen in not just a one-day basis, but the last 3 days as well. Very sharp.
Well, very sharp volumes coming back, and one of the technical indicators like the 200-day moving average. So it's been just 1.5 years for the stock approximately from being listed, and so formation of the 200 moving average takes a lot of time because you have to pass out that 1 year of trading period. But then I think many of these stocks which were reeling significantly below their very recently formed long-term averages, these stocks have now managed to challenge their 200 DMAs and break past about those levels. Now that's a very strong and a potent signal that these stocks are trying to reverse a major downward trend for themselves. We look at the last 2 days of activity, volume activity for the stocks that has shot up significantly. The prices have managed to make a comeback, breaking past above the previous quarter of resistance. For example, for a stock like Paytm, Zomato is still yet to confirm a breakout above that 58.5, 59 mark. Possibly the stock can rally up to those 60 plus levels. It could also confirm a breakout. But yes, there seems to be a recovery and a renewed vigor which has happened or come back into this name.
All right, that's the view coming in on those new age tech stocks. But let's also hear it out from Atul Surya, Marathon Trends PMS. He's bullish on the capital goods sector, believing that these stocks can scale new heights.
FMCG stocks continue to make new highs. Electrical equipments, capital goods I've been talking about, they continue to make highs. So even in the face of adversity, when there are stocks and sectors that continue to move up, and as I said, the sector where the contagion could be highest, which would be banking, has also held on very well.
The investing in market is definitely not a sprint but a marathon, and that's what's happening with the Indian markets as well. But Atul, before the budget, when we spoke, you were quite bullish about the entire industrials and manufacturing theme. Post the budget, have there been any new pockets or areas that have emerged with respect to the fresh investments?
No, I think that a lot of these stocks, even in the face post budget and this correction, have actually gone on and made new lifetime highs. And the numbers that have been coming out of them are spectacular. So you are really seeing that, as I said, that tough times don't last, but tough people do. And this was a case in point of some great companies, which I feel that where the trend is. I still reiterate, I feel electrical equipments, cap goods, etc., in the industry-facing sectors look very good to me, and they have really held out very well in this fall. So I think it makes me a little more confident.
Just to take that point further, then those industry-facing, stocks and sectors that you're completely bullish on, what's the view on the entire capital goods space? Would it extend to, say, defense-related stocks, railway, or even those closer to real estate and infrastructure?
See, defense has been doing very well. In fact, if you see the last 1 year, barring PSU banks, we don't have a sectoral indices, but we've done some work. The sector that did the best was defense. In fact, defense stocks are going through a bit of a correction. But I think that, again, it's a longer term theme that is going to play out. And I do think that, post a correction, you are going to see accumulation happening and they'll take off. I mean, not just that, you look at something like tire stocks, they are also doing very, very well. So there are a lot of pockets, hotel stocks, hospitality. So the breadth, it's not just linked to banking, or it's just not linked to, one IT. The breadth, you look at banks, barring last week, they've done very well. Defense stocks have been doing well. Tire stocks have been doing well. Hotel stocks have been doing well. Selectively, FMCG stocks have done well. Fertilizers have done well. Cap goods have done well. So the breadth or the sectors, it's not that the market is being driven by any one sector. In fact, that always becomes a pain point, and that is what is good. This is also what you're seeing in the US. If you look at US markets, you'll find that the breadth is very good. The mid caps, small caps. So the breadth is we look at the tech spaces because obviously they are bubbly and they move up and down, so they become headline news. But a lot of these boring industrial plays also are doing very, very well, and they are, remember, participating in a up move after almost a decade of underperformance.
The pyramidal enterprise numbers, and they look optically very, very different. But remember, it's a NBFC. They've gone through a series of write-offs, and that is the reason why in the pre-open session, despite this huge uptick in the number, the market reaction is not there. For pyramidal enterprises, it is very crucial to convince the market that the wholesale book has stabilized and the retail lending has started. Till the time that churn will not happen, I don't think pyramidal enterprise as a stock is going to get a lot of traction. Chakri, this is one group which in a sense has, I would say, surprised me and has disappointed a lot, both in terms of the NBFC performance and the pharma performance. Why is that?
So we've also stayed away from this bank from this company for the simple reason that the books are quite messy, and if you look at and trying to sift through that has taken an inordinate amount of time. So therefore, it's clearly easier to focus on. That's the reason we've stayed away. We have not really gone in too much into pyramidal enterprises.
All right, let's get in those index calls quickly and find out. Chakri, thanks so much, by the way, for joining in, and find out what exactly our chartists are expecting. Do remember, Kunal said that he's expecting quite a bit of a consolidation in the market. So book profits, no surprises then to see that stance hold from the rest of our experts. And that pretty much seems to be the consensus call on the index this morning, with the pre-open rates mildly in the green. What about the Nifty Bank Index, and what is it that our chartists are expecting in terms of their call? A unanimous hold. That's what all three of them are saying, and that's what the market moodometer is reflecting on the Nifty Bank.
then for the market open, and it seems like it's going to be once again a very, very quiet start. Let's see where we take it up from there. But Kunal, you're getting conviction that slowly and gradually the band, or rather the range for the market, the index in specific, is getting higher.
Yeah, it's getting higher, but then again, I think we are back into that resistance zone, 18,000 levels for the index, for the Nifty, which has been acting as a major resistance over the last 3 to 4 weeks. So even this time around, I would expect that the resistance could play out, because most of the other global indices as well are also going into a range action, and when they're coming closer to the resistances, you're seeing the indices get into correction. So I would probably expect a similar stance for Nifty as well. It's just that the bank Nifty is still not come back to the resistance point. 42,400, 500 is the zone of resistance for bank Nifty. So I would probably expect a room of another at least 700 plus points for the bank Nifty over the very near term.
You know, I just want to make one very simple point here. Now look at the construct of the market. You may argue and say, okay, Nifty range bound. Nifty is not doing anywhere. It does not have momentum. It is going one step forward, two step back, or two step forward, three steps back, whichever you want to look at it. Look at what has been thrown at the market this year. FIs have been net sellers. Adani sell-off fiasco. You've got Fed. A decisive move has happened on the global front in terms of money migrating back into China. Earnings season, you've got more downgrades rather than upgrades if I take financials out. Fourth, commodity prices, at least oil, is back above $85, $86. Reserve Bank of India has increased rates. Now, look at what has been thrown at us in terms of events which you never anticipated. Nobody anticipated this kind of an FI selling. Nobody anticipated Adani group of stocks and that fiasco and the domino effect it will have on lenders and again on Adani group of stocks and what it does to the positioning of some of these stocks. But despite that, if the markets are holding on, for me, I would say that is resilience. For me, I would say that that is a perfect sign that Nifty, despite whatever has been thrown at it, has been resilient. So Naresh, we may say a glass half empty, but I would say in this case, glass is not half full, but it is 3/4 full. With so much of bad news thrown at the market, Nifty has frankly just managed to resist the fall.
Absolutely. So if you look at, we are at 17,800, 900 today. And say in Nifty, if you look at Adani Ports and Adani Enterprises, they used to have a 2% weight, and they've fallen even now 25 to 40% from the peak. So you can say from 18,000, whatever we are down 100 points, the impact has come from these two stocks, and we are still at the same place. So it shows a lot of resilience that the largest, almost the second largest conglomerate in India in terms of market cap before this fall, took a 50% hit and the markets did not correct. There was no contagion across the market. So that's really a very strong indication. And now we need to watch for either price action to confirm that or global markets to confirm a breakout. So resilience has been strong. The broader market has continued to hold on. We are now waiting for things wherein, say, if the flows change or something changes globally, we can see the next leg of the move. So the bias is positive, waiting out for the Nifty to confirm it with price action about 18,000.
40 seconds to go. It's a big day. It's a busy day for numbers per se, largely because you've got Zomato, you've got LIC, a lot of numbers from the mid-cap space, names like Voltas, Lupin, Aurobindo Pharma. Lots of numbers in a sense are crucial today. Page Industries, frankly, not on everyone's radar. It's all about fintech and consumer tech. Paytm has really lit up the screen with the kind of commentary they've indicated. Will Zomato do the same? Numbers expected post-market are. That's the brokerages, and that's how brokerages in a sense are now talking about it. It's one of those I told you so moment, humne to bola tha Paytm bounce karega type. But let's see, there is a supply overhang which is a problem for Paytm because of Alibaba and because of SoftBank. 7 seconds to go. We had a reasonable Wednesday. Are we in for a decent Thursday? First rates will just start coming up on your screen now. We'll capture it live, real time. And there you go. First rates are coming up on the screen. It's a flat start for the Nifty. The breadth, I wouldn't say it's near perfect, but the breadth is off to a good start. I'll just wait for the rates to start loading up on my screen. The Bank Nifty benchmark indices are off to a good start. Point number one. Point number two, no large sizable buying. Adani Wilmar up 5%. Zomato up 1/4%. You've got NCC which is reacting to numbers that they are looking very decent, and boy, where is Paytm? Up another 4%. Aren't we used to reporting the other side? 700 rupees for Paytm. 450 has become 700 in just a jiffy. What a comeback it's been in Paytm. I never expected this much of this kind of a comeback, I must honestly confess. Adani Ports, for some strange reason, is down 6%. The mystery in the Adani group of stocks continues. There is no linear move now. So Adani Wilmar up, Adani Ports down. Of course, that MSCI inclusion, MSCI changes will have an impact on names like Adani Ports because they are FI dominated stocks. I want to quickly look at all the consumer tech stocks and fintech stocks, whether it is Paytm, Zomato, Policy Bazaar and Nykaa, and what is the trend there. With the exception of Paytm, there are no large fireworks in any of the stocks. Aisha?
Yeah, just want to check in on a couple of earnings reactions. NCC actually is a dhamaka set, to be honest. Just bring up that stock up for you because the net profits have shown an uptick of nearly 100%. They've doubled in this particular quarter. Of course, this is only on a year-on-year basis, not a sequential benchmark that I'm talking about. The revenue as well has seen near about a 28% jump up. NCC starts off a gap up about 3% in a trade right now. There's also Oberoi Realty, very good numbers coming in there as well. And then, of course, Trent too, while the EBITDA margins have come down, both the profit as well as the top line have seen a significant increase coming in. Narayana Healthcare as well is one set which has come out with its earnings. In fact, I'm just going to map the scorecard for you because strong numbers from not just NCC but from a Piramal Enterprises, from an Equitas Small Finance Bank, ITD Cementation, Cummins, TD Power Systems, JB Chemicals, all have come out with good set of numbers. And now let's talk about the weak numbers. Piramal Pharma has been a weak set, Gati has been a weak set. Look at what Restaurant Brands Asia and what specialty restaurants have done. Both have got hit in this particular quarter. Piramal Pharma, of course, starts off sharply lower. Restaurant Asia down about 3% and specialty restaurant as well, which is reported weak quarter. Honeywell Automation, Traction, Endurance, Pre-Call, they've all come out with big set of numbers. Inline set for a trend, for a Godrej Agrovet, for a Minda Corp, Ircon, Narayana Healthcare, and then of course Sirma SGS as well, which has come out with an inline set of numbers. So these are a couple of stocks which are in focus. For the index though, we've started off only just about sluggish and quiet. Let's see how the rest of the day pans out. But under pressure once again for the Adani group of names. Kunal, any particular trend that you've spotted while the index and the Nifty Bank both have started off absolutely flat?
Yeah, I think it's as per expected lines. I was not expecting any major breakout or breakdown because even the options data, because today is the weekly expiry, also indicates that 17,800 to 18,000 is the fresh range for the index for today's expiry. So probably if the index dips towards that 17,800 mark, then I think we could probably take this as an opportunity to create intraday longs on the index. Now the stock which I would look to go for an opening trade at current levels would be Havells. I think it's a very interesting chart in the making, 30 plus levels for the stock. So that's the stock which I would look to buy.
Okay. Naresh, what stocks are you trading right now?
So that is the whole gas name. So that is where Mahanagar Gas has given a breakout. That looks promising for a move. So buying at current levels, I will add more about 920 levels.
Well, Adani group of stocks today have turned. Now the volatility or the extreme volatility I think continues in some of these stocks. Yesterday it was up. Today it's down. Nothing has changed, frankly, in terms of the positioning. Adani Enterprises down 10%, Adani Ports down 5%. Well, there is a bit of a news on MSCI, and then of course Total has said that they are not going to be investing more in Adani Green till the time some of the till the time they don't get clarity in terms of some of the concerns which have been raised by a lot of other global rating agencies. That's a comment coming from Total. But that should impact Adani Total or that should impact Adani Green. But Adani Wilmar is off to a good start and Adani Total Gas is down by 5%. The circuit continues, let me put it this way. Rahul Chadha, Chief Investment Officer with Mera Asset Management, joins us. Rahul, good morning. Thank you for joining us. It's been a very, 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 very news-heavy period. Budget, credit policy, rout and Adani group of stocks, FIs are selling, and yet Indian markets have not broken down. Do you think rather than looking at the market underperformance, we should applaud it for the fact that despite so much of uncertain news, the Nifty or benchmark indices are still standing tall?
Absolutely, Nikunj. I think the economy is not doing that bad. So there is some bit of a slowdown. But from a relative growth perspective, also 5 to 6% real GDP and a nominal GDP of 10 plus percent or around 10% is a good number. So I think that is what is being reflected. Look, what market is kind of paying a premium for is all the good action the government is taking. The budget wasn't really bad. Government, despite elections being 12 to 15 months away, stayed committed to fiscal prudence. So deficit was down 0.5%, committed to increasing capital expenditure by 20-25%. There were no specific handouts. So I think all that was taken positively. And as far as the Adani Group issue is concerned, look, most investors used to privately talk about it. Some of those issues have been highlighted. In a way, it's been a blessing in disguise that the issues have been highlighted now rather than 5 years later, where it could have been a much more systemic risk. Hopefully, everybody learns from it. I think the good thing is, unlike what happened in 9/12 when we had the likes of JPA go down and the domestic banks had huge exposure, right now domestic banking has very limited exposure. So as long as the group reforms in terms of the governance practices, the leverage, the pledges, etc., I think it should be a good learning from a medium-term perspective.
Yeah. One, do you think there is going to be no domino effect of what has happened in Adani Group of stocks in other lenders and other NBFCs? Because the fear in the market is, like you alluded to, that this is an over-leveraged group, and if anything goes wrong here, it could significantly have an impact on the lender's books or the lender's balance sheet.
Prudent lenders, which definitely would not have an impact. NBFCs, again, I'm not sure. I'm going to be very honest here, because one doesn't know. The group's shares have done very well over the last 12 to 18 months. And typically, when the stocks do well, the tendency is to take a lot more leverage. There's a lot more room available for the pledge. So one doesn't know what are the pledges through some of the non-disclosed entities, etc. So it's only time what would tell us the true extent of the pledge and the coverage, etc. The hope is that there are some businesses which are good cash-generating businesses. They've committed to reduce the capex of the Adani port. Hopefully, that cash can take care of the leverage, and we should come out of this well.
Decline to buy any of the Adani Group stocks?
I think I'll wait for a while. Again, as we've discussed before, I'm one of the most conservative ones. The funds I run are ESG sustainable funds. So it would require a couple of quarters of effort in terms of disclosure, more on ESG, on governance rather than growth, for me to look at and buy some of them.
But Rahul, tell me, has this entire Adani episode, the stocks may do whatever they're doing and they're already in recovery mode, but has it somewhere sort of raised eyebrows and sort of tainted the India image, which was going just so well up until last year in terms of purely corporate governance standards?
I would use the word tainted. I think that's a bit strong word, but look, questions are being asked. So I was on a 2-week marketing trip in Europe. Almost every meeting had Adani question come up, and one had to explain what we just discussed before. What we've got to realize is, if over the next 5-10 years, India is becoming the third largest economy in the world, our large companies would be, in fact, most of our companies would be subject to a lot more scrutiny. And we saw that in time and again. Some of these short sellers come and write reports on the Chinese companies. Some of the reports were true, some of them were sensational. Look, markets took it at the strides. Wherever the reports were true, obviously the stocks got impacted.
Okay.
Right. Okay, let's move away then from the Adani names and where you're sitting right now. It seems like those are the markets which are sought after most right now, both China as well as HK. Wanted to understand whether purely on a relative basis, Rahul, is the India attractiveness easing off? Because other markets which have been stark underperformers for the last 2 years, they're clearly generating a higher alpha.
Okay, so if I say what we were doing in our portfolio last year, I would say April, May, when everybody was euphoric about India. And look, it came in our funds also. We've been always overweight India. Last May, our India overweight in Asia funds were running 27-28%. We were taking some money off the table because market were looking expensive. If you would have remembered, I was talking about the drawdown in reserves and the likely slowdown which was going to happen. This was a concern July, August onwards, whereas China was almost priced for bankruptcy levels. It was hated market. It was uninvestable. pretty much like now. Now everybody is tired of India. Nobody wants to talk of India because China is making easy money. So I think that was the trade with China then. Now, if we talk, I think the trade is to take money off China, Hong Kong, China, and put that money in India. In fact, if you ask us what we've been doing in recent days, weeks, etc., that's something. Some of these Chinese names look fully priced for the reopening trade. Reopening is going to be a benefit of $100 billion in terms of consumptions. The internet names there, particularly the e-commerce names, have penetration levels which seem like full growth rates are going to slow down from here. So any long-term prudent investor from a medium-term perspective would book some gains in China on rise and look at a structural story like India to buy into tips. So I would be contrarian to what you hear most investors doing here.
When do you think money will come back into India? Because the economy is doing well, the budget has been great, inflation is speaking out, valuations are not that stretched. हमारा समय कब आएगा?
It will come definitely. See, what we have to realize is you make the maximum returns when people are pessimistic, when market participants are pessimistic, because that's where you get your good entry points. And 6 months later, as we keep continuing doing our job in terms of country, in terms of results, etc., and while other countries kind of struggle from structural issues, obviously people would realize that's the time to come back. But by that time, you'll get 20-30% higher stock prices. So that means those returns would be lower from what we should see today. So any prudent investor should look to increase exposure now. I mean, we've been cautious about markets for last 12-18 months with the premise that the Fed is hiking, things are going to slow down. I think worst of that slowdown is behind us. 6 months from now, narrative is going to be when does Fed eases. RBI also narrative would kind of a change now. Goods inflation is coming down. Service inflation is not much of an issue for EMs where kind of unemployment levels are high. So things should be much better in second half. So this is probably the worst of the quarters we've seen. Forex reserves also touched a low of 525 bill today as we talk, are somewhere around 560, 530 bill. It should get reflected in the growth numbers in the coming quarters.
Rahul, I distinctly remember we had this chat around insurance sector. That this is like a great phenomenal multi-year trend. But considering what the changes in the government policy making are, especially for the life insurance sector, do you think the story is getting slightly sour? One of the big factors which in a sense was driving the life insurance sales was tax savings. If that is off the table and if India is moving towards a new tax regime, will that have an impact on the life insurance sector per se going forward? And have you changed your view there?
So we've liked this sector from a medium-term perspective, and obviously government or some of the tax regime getting changed was a risk factor. So that's played out now, which is where stocks will take their time to digest this. Probably there would be a period of 12-18 months where the growth rates would be limited, but the structural story kind of Indians being underinsured and this need for higher savings through insurance products remains. So it's a matter of time in a year from now when the growth rates return, and all these are good, well-managed companies. So we remain positive on the space.
You do have IT exposure. I don't know whether that extends itself into the new age fintech companies or not. But in specific, if I just talk about that cluster, they're turning around and sooner than anticipated. We saw it from Paytm, and hopefully Zomato as well should be doing the trick today when it declares its numbers. Area of interest for you?
Yeah, so we've liked some of these new age IPOs. I think Zomato and Nykaa was where we kind of initiated exposure when the stocks were down 50-60% from hikes. Our point was, look, with good managements, business models with strong headrooms for growth, some of these valuations were reasonable, or some of the pessimism about growth was baked in when the stocks were down 60-70% from their highs. PTM, honestly, I've got to do more work over there. And why I say more work is because there's a credible bunch of peer set, which is the private sector banks, which is available. And those private sector banks for us are kind of a fintech giants of India, which are available a fraction of value of these new age fintech companies. A lot of these new age fintech companies are giving the loans, growing fast. Some of these loans are, again, in the underpenetrated categories. And you don't have much of a credit history over there. So it's easy to get excited over there but one doesn't know what happens when the cycle turns bad. So which is why I'd rather play that through the established private sector banks where one has 10, 15, 20-year history of credit cycles. And if one wants to play at the new age internet exposure, look at the likes of Zomato, Nykaa for that matter.
Why just private sector banks, Rahul? The story seems to be in the PSB lot.
No, absolutely, absolutely. So again, private sector banks are more from fintech perspective, but look, the PSU banks are also going to do well. Look, this Adani episode slight blemish on the PSU banks, but the view is that the leading PSU banks are correct in their assessment and disclosures about their exposure to the group, and it should not cause serious damage, etc. But we continue to like the leading public sector banks like SBI, Bob, etc.
10% down for Adani Enterprises, 5% down for Adani Transmission. I think Adani Ports must have also turned volatile. Is it the MSCI impact, or these stocks had fallen so hard that a bounce was due? But when a bounce comes back, you will not. The stocks are not going to stabilize on a day or so, because the technical factors, demand, supply, promoter pledges, LAs, loan against securities, there are so many factors at play. And on top of that, the fact that Adani Enterprise and Adani Group will have to mathematically slow down their business. 20,000 crore of FPO does not come in. That was supposed to be done for Adani Enterprise. If that equity does not come in, obviously it will have impact on your future plans, green hydrogen, airport. Those businesses have to slow down, mathematically speaking, and that is something which markets will take their time to adjust and digest. So Rahul, before we wrap, give us a structural theme for 2023 and beyond, and give us a tactical trade which may have a shelf life of, let's say, 3 to 4 quarters.
Okay, so I think the structural theme continues to be financials. They're a best play on improving economy. Industrials are interesting here because look, for the first time we've seen capex pick up. The government capex continues to be fairly high at 3.5% of GDP. It's moved from 2%. The spends are high. If the government capex continues to be this good and the economy recovers, private sector capex is going to pick up. So financials and industrials more medium term theme. And from a 3-4 quarter, autos look interesting. I think what's happened is if you look at the average age of the vehicles, that's about 8 to 9 years, particularly for four-wheelers. There's a strong replacement cycle coming in. There's a fair bit of an excitement with the new models being launched. And look, the sector is not that expensive. So autos from 3 to 4 quarters and industrials and banks from a medium-term perspective.
All right. Rahul Chadha, appreciate your time. Thank you so very much for joining us, and good to have you on the show. Trend is up 5%, Cummins is up 7%. We had these two stocks on the radar today. I mean, these are pure result reaction. We are in that phase of the market where after the fiasco which got created in the market because of Adani group of stocks, the market positioning is different from what it was in the month of first week of Jan. First week of Jan or second week of Jan, before the Adani fiasco, markets were ignoring good news and they were punishing bad news. But after that rout, the markets have become so loud that genuine good news, in a sense, is getting rewarded. And one company which has come out with one healthcare chain which has come out with a good set of numbers is Narayana Healthcare. Sandhya J, Group Chief Financial Officer, joins us now. Sandhya, good morning. Thank you for joining us. Always delight to have you on ET Now. Sandhya, walk us through the numbers. While top line is up in mid-teens or late teens, there is a big jump in profitability. What has led to margin expansion? Is it operating leverage or is it some kind of a write back which has kicked in?
Yeah, so this time there has not been too many one-timers in our, I think last quarter we had some one-timers. This time it's largely organic. The improvement has come on account of 2-3 items. One is that last year we still had a heavy COVID COVID impact in the numbers, because of which the consumption was higher. So we've had savings on that part. Secondly, a lot of our growth is coming from more efficiency with the existing capacity. As you would have seen, we are not adding more beds, but still growth is coming. That's because we are adding more capabilities. We are working on debottlenecking, say the ICUs, lab diagnostics, those other capabilities that enhance your throughput. So because it's coming on the same cost base, that means that we are getting more efficiency with the same cost and a higher revenue. So that is also giving us some tailwind into the margins. And of course, Cayman performance has also been contributing to our overall margin expansion. So that's kind of giving us the improvement that we've been able to bring to our bottom line.
Sandhya, you just talked about Cayman, and as I understand it, its contribution to your overall profits is pretty high. And it stands at about over 20%, if I'm not mistaken. Do you expect this kind of run rate to actually continue, where you'll continue to clock in, say, over 20% growth from Cayman in particular?
So growth from Cayman will be organic, like the way we are seeing in India. We will see organic growth in Cayman. In addition to that, we are investing about $100 million in Cayman towards a radiation oncology block, which will open in the first quarter of this year, and also a expansion of another hospital in the city center, which will come back end of next year, which is FY24. Now that will give more capacity, and so that will give the next phase of inorganic growth for Cayman. But I think so. Couple of aspects on Cayman. One is that we originally envisaged it to be a tourist driven business, but we've because of the way we've been able to deliver value for the population of Cayman itself and the Caribbean at large, so we've been able to create that brand equity there. And so a lot of the population that are people that are coming to us now are people that are either from Cayman or in and around, from the Caribbean. So that we believe is little more sustainable than, a tourist driven model. So that also gives us confidence that we will be able to reasonably sustain the organic growth rate until the inorganic benefit kicks in.
Let me also talk about the Bangalore as well as Kolkata clusters, because as we understand it, they continue their, strong ramp up. Do you expect, again, growth from these geographies as well to continue?
Sure. So in the short term, the growth has to come from efficiencies because these are reasonably filled hospitals. So the various measures of efficiencies, like when we started, I was speaking about debottlenecking some of the additional capacities like your ICU, OT capacity, your diagnostic capacities, which become bottlenecks in throughput. So that is one aspect. Second, we are doing a lot of work on process efficiency and how we can do things faster. So how we can do more surgeries, how we can do more throughput through the diagnostics, things like that. So that is one aspect. We will continue to work on a lot of the daycare procedures where we have seen significant traction. In fact, what were traditionally overnight stay procedures, now we are able to come in the morning and leave in the evening. So even without having to increase capacity, we are able to generate the throughput into the hospital. So in the short term, till our capacity expansion kicks in, the growth in these hospitals will come from more efficiencies that we will work on. We do have an ambition. In fact, significant chunk of our capex is allocated to Bangalore and Calcutta. We will add additional beds in Bangalore. In our existing campus itself, we have space. As far as Kolkata is concerned, we are in the stages of finalizing a land, and we will build a new hospital in Kolkata. So the next stage of growth will probably come, the next step up growth will come when the new facilities come. But I think until then, we have enough headspace to be able to sustain the growth. And of course, healthcare is not, I cannot make a forward-looking statement saying this is how we'll grow, because there are many variables in healthcare, as you've seen in the past 3 years. But other things remaining constant, I think we have headspace in Bangalore and Kolkata till our expansions kick in.
What I also wanted to understand was your current net debt, Sandhya, because that stands at 250 odd crore rupees. It's generating strong FCF across your business. But in the interim, given the high intensity of capex, is the net debt likely to go up?
Sure. So net, we will. So what we've indicated is that this year we will, we have or are going to finish at about 1,000 crores of capex. Roughly 40% has come from borrowing, and we will probably. I'm talking about gross. I'll come to net in a bit. So at a gross level, I think we will finish at say 850, 900 crores of capex of gross debt. I think next year again we are looking at about 1,000 crores of capex. Half of it we will fund from internal accruals and cash flows that we are generating. So the other half we will borrow. So that will be the growth in the gross debt. As far as the net debt is concerned, most of the cash flows we are generating right now, I think about 500 crores of cash we are holding. Most of what we are generating as cash flows, we will try to reinvest into our capex build. There will be some that we will reserve for any, we will keep aside if we have to do any large inorganic or any activities that come up which need that funding. So I think our net debt from 200 crores may go to say 500, 600 crores is the broad number we are having in mind. But that's of course subject to how the business evolves.
Absolutely. Sandhya, great to speak with you today on ET Now. Thank you so much for taking the time out.
Thank you for having me here.
Okay, that's the word coming in from Narayana Healthcare. A lot of earnings which the market is reacting to, which by the way, after a quiet start, has actually slipped. We're down about almost 0.5% for the index, but that's okay. The headline number for the Nifty futures is still just hovering around that 17,850 level. So that's giving you comfort. The Adani group of names are the ones which are once again under pressure. Adani Enterprises down 15%, Adani Ports down 7.5%, Ambuja ACC are both falling, and these are just the futures rates that I'm talking about. Good numbers for a Cummins, inline set for Trent, but Trent has jumped up after the recent underperformance in the stock. That stock holding up 6.25%. Oberoi Realty came out with a good set of numbers, and that stock as well is higher by 1.5% as we speak. But since we're on the subject of earnings, let me also welcome on board Bharat Madan, the whole-time director and CFO at Escorts Kubota, joining in on the show right now. Bharat, hi, morning. Great to have you on ET Now as always. First, Bharat, I want to talk about your margins because while it's been an uptick of 8.4%, Street was anticipating a double-digit mark from you. Tell me, is there margin pressure? Do you foresee that continuing, or do you think with the fall in commodity prices, we can expect that double-digit mark?
Hi, good morning. Yes, I think as you rightly said, yes, the margins have been under pressure, and that's because of the steep inflation. There's a bit of it still remains unabsorbed on the books, which has not been able to pass on. And even the price increase which we took in the last quarter, that came after the festive season was over. So that's why you couldn't see the full impact of that pricing benefit, coming into the quarter. But now of late, we've been seeing the softening has started in the commodity price, especially the commodities which are used in tractor, which are mostly casting and tires, which has actually done a major increase, more than 50% in the last few quarters. So we expect the softening will happen, and we probably will start getting those benefits in the coming quarters.
Okay. When you say coming quarters, do you have visibility as to when will we see a margin improvement kick in?
Yeah, so in our view, I think 2 to 3 quarters, I think is what it will take, because the inflation also happened over the course of last 7-8 quarters. So obviously the decline will also be in gradual only. It will not be steep decline. So we'll have to be all patient, and maybe in the next few quarters we'll see the margins also coming back. But overall, the industry looks good. I think all 3 segments have done extremely well. I think on the top line, we have no complaints. Industry is performing very well. Tractors are growing. This quarter also looks like it'll be a good growth numbers for the tractor industry. And same also the infra side on the construction equipment and railway business too.
Sure. What about volumes though? Because the RBI as well stated that there has been an improvement in rural sentiment, and the outlook you think is looking up with Rabi sowing showing strong growth?
Yeah, so we are seeing a good uptake. So as you would have seen in month of January also, I think the industry has grown more than 20% in this month. So initial indication when we started the year, and we had concern about the monsoon, but I think the way things have panned out, from the initial indication of mid-single digit growth for tractor industry, now looks like the industry may hit actually double-digit growth.
Now, so Mr. Madan, morning. What is the outlook then in terms of your volume growth for domestic tractors? Because that's risen sequentially by about 22%. Industry growth was 11%. Your current market share stands at a 10.6% level. So what kind of guidance are we seeing when it comes to your tractor volumes in the next 2 to 3 quarters?
I can talk about this current quarter where we have better visibility. So we definitely see a double-digit growth will continue in this quarter. I think by end of March, beginning of April, when we have more guidance from the weather agencies, both Skymet and IMD, I think we'll get a fair forecast about the weather. There's some concerns that come initially in terms of the maybe possibility of El Nino impact and maybe below normal monsoon. So let's see. I think we'll have to wait, watch till March, April, and probably will be in a better position. But if the monsoon is good, we expect the trend should continue next year too.
Could you broadly tell us that what is your understanding of the current supply chain in terms of inventory levels?
I think we got a very decent inventory looking at the season which is coming now, and it will start from end of February and continue till March. So I think looking at that, we have about 4.5 weeks of inventory levels. So I think which is sufficient looking at the season which is on.
Thank you for your time, Mr. Madan. Always a pleasure to have you on ET. Now let's take a break with the news that markets are off from the day's high. In percentage terms, it's not much, but for the Bank Nifty, it's a dip of about 350 points.
The sell-off in Adani Group of stocks has led to extraordinary volatility in the market. And the regulator's job and the government's job is to curb the market volatility. Given that this kind of an extraordinary volatility could be repeated, is there a case in revisiting the way how FIs invest and trade in India?
I think the SEBI should be given a time to, come up clearly on understanding how this happened, what has actually happened. When I say what has happened, I'm saying it in a lot more deeper sense. I think it's now time for them to get a comprehensive picture, and I'm sure they would do it.
So glad you like the apartment, and this is our swimming pool.
पर इतने प्रेशर में कैसे जिएंगे?
Housing.com, जहाँ है मैक्सिमम प्रॉपर्टीज. Housing.com पर से परफेक्ट. डाउनलोड नाउ.
वाह, फिर से छुट्टी?
हाँ ब्रो.
इतने में अगर मार्केट ऊपर गया और मैं नहीं तो?
मगर मैं
प्रॉपर रिसर्च करके मुझे इन्वेस्ट करो. छुट्टी कैंसिल.
पैसे ने काम पर लगा रखा है. गेट ईटी मनी. जानो बेटर रिटर्न्स के लिए कब और कहाँ इन्वेस्ट करना है. अब आप पैसे को काम पे लगाओ. डाउनलोड ईटी मनी नाउ.
Babe, I love this apartment. Island kitchen.
लॉक करें.
और जब ये नया फ्लाईओवर बन जाएगा ना, Mom and Dad will be just 20 minutes away. तो परफेक्ट नहीं है घर.
इसीलिए Housing.com with maximum properties. Housing.com पर से परफेक्ट.
Alright, Nimish Company, founding partner with 108 Capital joins us now. Nimish, good to have you back. 108 or 108, 8 plus 1 is 9. Is that the number derived from numerology for your firm?
A lot of reasons for that, which I think I will definitely chat offline on that. But yeah, one of them is what you just said.
Oh, nice, sure. Nice. I thought as much. If one has to look at the absolute performance for some of the fintech and consumer stocks, first, it was a one-sided selling. Now it's a one-sided rally. Where will they settle?
So I think, Nikunj, let's just go back a little in time, right? Post-COVID, I think the period that we were looking at was an illusionary period, a period which had favorable conditions like low interest rates, excess liquidity in the system, benign inflation, which all led to the belief that this will continue forever, right? And that's where the illusion was, with complete disregard to history, right? So I think that's when you saw valuations where they were, mistakes were forgiven, mishaps were forgiven, and people were just pumping in money, right? Then we saw a period where interest rates started to rise, right? And that's where you started seeing focus coming back to reality and how traditional businesses are done in value, right? So some of that started percolating down towards the new age tech firms, and you started seeing the pressure build up, right? Today, we have reached a stage where some of the issues that we were looking at are tapering down, right? For example, inflation is now more or less coming under control. We already saw the statement from the US Fed in terms of how they're looking at the interest rate hikes. So some of those factors with, of course, the growth being there in all of the newer tech companies, both globally and in India, I think it's time to relook at allocation into this section, because I think large part of investors also stayed away, right? Because these are high beta stocks, and people would stay away from this segment. And that is what you saw happening in the last few months. And today now, many of the stocks, even if you look at the US markets, are up around 30 to 50% from the lows, but way away from their all-time highs, which I think will take some time because the period of illusion is gone. But I think, yes, fundamentally, I think these continue to remain long-term bets. Change is inevitable, and I would continue to look at them favorably for the long term.
Nimish, hi, morning. Wanted to also understand the outlook for some of these companies in light of the fact that we've seen a global tech meltdown. There has been loss reporting businesses. We have seen mass layoffs as well that has taken place. Is that an underlying or a lingering worry that things could reverse as quickly as they did?
So I think one of the things that I said earlier was mistakes and mishaps were forgiven, right? I think one of the most important role of a founder who's raising money is basically capital allocation, right? You need to allocate the capital in the right manner because you are still in an investing mode. You're in a high growth company mode, right? Most of the capital that was being allocated in the past in that period was for growth of customers, right? And that's what you used to see across the board, which would lead to business growth and ultimately you will monetize in the future. However, I think the period of this normalcy, the period of what I think Mark Zuckerberg just mentioned last week is going to be year of efficiency, is we would see capital allocation being done the right way. And by the right way, I would mean in the way a businessman would do. So allocating it for growth of business, allocating it for growth of customers. Also, you need allocation for new business and innovations because these are very innovative companies. And at the end of it, you also need strategic growth. So that leads to capital efficiency. And that's where you're seeing layoffs coming in. Because, of course, in euphoric times, you would chase growth at any cost. And that's where they were investing huge amounts. So I think capital efficiency will come in, which ultimately leads to P&L positivity. And that's why you're seeing the re-rating of stocks that is happening in the Indian market as well. So I think these factors, and again, external factors are also favorable. So I would look at them positively now with traditional business sense prevailing over new age tech companies. So I think it's a mix of traditional versus new age coming together and sustainability and scalability prevailing.
What these stocks at the IPO price for Paytm, for Zomato, for Nykaa, what should they do? Average it?
So that's one thing I think. No, so if you are a long-term investor, I would invest in this market, no matter where the stocks are or which stock you're looking at, because ultimately, when some of these stocks have got listed and have got very good promoters, very good founders, good governance, I think when all of those tick marks are done, and of course, growth will come, but we have to be patient, right? You cannot expect 100% growth quarter on quarter and the stock price to just go in one direction. So as a long-term investor, I would invest, which is very unlike what we see in the retail market in India. So it's for a patient investor game. So as a patient investor, I'll definitely invest.
So, Nimish, if one has to just look at entering into some of these stocks at the current levels, I just want to understand what are the parameters that you look at to know that a business model can deliver exponential growth?
So I think, of course, the most talked about one is path to profitability, right? But that, again, balanced with the right amount of growth in the right businesses at the right cost, Right? So I think that is something we need to deep dive into the numbers, where the growth of business should not be at the cost of profit. I think we were used to a time when cash burn was a currency, right? Today, cash burn is no more a currency. People want to see scalability, but at the same time, you want to see sustainability. So of course, it all boils down to the profits you'll be making. And at the end of the day, once you're out of the high growth phase, you go into the normal growth, and that's when you'll be valued on a price to earning basis, right? Which will eventually happen. You will no longer continue to get valuation that a tech company gets forever, right? So even if you look at any of the names globally, ultimately it boils down to the business they are in, right? So Facebook, Google, at the end of the day, would command a large valuation based on their advertisement revenues and where your money comes from. So I think that is what we would look at. And of course, I think the vision is very important of what the founders have in terms of where the business will grow, where is innovation coming from, because ultimately, I think there is only a point up to which you can grow a business that you started with. You need to keep on innovating, you need to keep on adding, and you need to go on going deeper into the wallet of customers. So is that something that any of these companies are doing? Or we got a first mover advantage, we started a business, we replicated something from the West, and that's where we are. So I would look at innovations and growth in terms of business profitably a lot more in detail.
Right. Nimish, I know I'm going to be putting you under the spotlight with this one, but just wanted to understand where is within this entire space your own positive bias. Any names that you could give us?
So I will stay away from giving names because I've invested in some of them. So I think that there is a conflict for me right away.
Okay, Nimish, we'll let you go on that note. Appreciate your time. Thanks very much for just putting that into perspective, because this is definitely a space that commands a lot of attention. I just want to move right on and pull up the stock price of Cummins India, because you've got some details coming in with respect to their conference call highlights, and they have said that they will attempt to hold on to their margins and that demand is going to be strong due to the government's infrastructure push. They have said that Q4 typically though is a bit of a weak quarter, but they are focusing on increasing distribution to increase their sales. And if China picks up activities, commodity costs could go up, but the softening capex cycle may impact the company. They have also said that as of now they can't comment on growth compared to the previous quarter, but the ambition is to grow at about 2 times that of the GDP. So those are some of the highlights coming in from Cummins. Remember, the company did put out a 66% growth in their overall PAT. You had the revenue growth as well. That has been fairly healthy. Their domestic sales as well increased 27%. Top fundamental stock ideas from Hemang Jani. Let's listen into his bets from the cement space.
One, I think if you have any move from the government about lowering the GST rate for cement, definitely it will be positive. And I think if you look at the quarterly numbers across the companies, be it Ramco Cement, Ambuja, ACC, Ultratech was a tad, disappointment, but the numbers have been pretty good. And given the fact that this is going to be 1 year before the election, the kind of order awarding by the government is picking up pace, which is good for the cement sector, and the real estate sector anyway is doing well. So I think we continue to have positive view. I think Ultratech, Ramco Cement, Dalmia, these are our preferred picks within that sector.
And here's Neeraj Diwan telling us why is it that he's betting big on Surya Roshni.
The stock I want to recommend today is Surya Roshni. Surya Roshni is into 2 different businesses. One is the lighting and consumer durable business, where 24% of the revenues come from this division. And in this division, this is the second largest lighting company in India. And you're seeing a decent growth coming, and plus there's a backward integration going on because of the PLI benefit that they've taken. And the second business for them is the steel pipes and steel strips segment, where 76% of the revenues are contributed from this division. And they are the largest producers of GI pipes in India and the largest exporters of ERW pipes from India. Second largest exporters of ERW pipes from India. And this is also, have strong demand coming from the consumer divisions, the consumer segment. The different consumer segments The user industries for this division are water, oil and gas, city gas distribution, natural gas transmission. So these divisions are giving good growth to this. And in the recent quarter, we've seen there's a good EBITDA by ton growth, which we've seen in the results. So that growth should continue going ahead because of the strong demand from the user industries. And even the debt, which they've been slowly reducing, is declining. So they recently also reduced the debt by about 156 crores. So even even if you value this at a conservative 8 times EBITDA 1 year forward, my target comes to 750. So it's a good stock for investment for 9 months to 1 year perspective.